Welcome to the Retirement Income Source, where it's always about investing for income the old-fashioned way. I'm Tim Sparks. We appreciate you taking out an hour today of your time to listen to our show. Our show is getting very popular here in Lexington and the surrounding counties, wherever 590 AM reaches out to, and we sure do appreciate you listening in and for all the phone calls that are coming in from the radio show and the message is getting out about investing for income. And most importantly, the goal is are you investing for income? Are you doing it the right way? Because see, when you go into retirement, you still need a return, and that return needs to be reliable, and because you need something to pay those to satisfy that withdrawal that you're taking out. And I've always known when you just have a large portfolio and you just withdraw money from it, here's what I know. I mean, does it make sense to just take money from your own principal? And that's what this show is all about. You see, when you accumulate wealth, growing principal is extremely important. But whenever you go into retirement, it doesn't make sense to sell principal to create income. I hope that makes sense. So that means you need to leverage your principal so that way you can get something called an interest or a dividend, so that way you can have a fighting chance and, most importantly, get the most mileage out of your money. This show is sponsored by Sparks Financial Group. We're a financial firm right here in the heart of Bluegrass, Lexington, Kentucky. What we teach here is based on my 20 years of experience and what to do, and most importantly, what not to do. Whether you're a pre-retiree who wants to get it right or a retiree who wants to end well, all I can say when it comes to your money, only you care about your money more so than anybody else, including your own financial advisor. So you need to be armed so that way you can be somewhat smarter than your financial advisor. Now think about it for a moment. WebMD. Why do people go to WebMD? Because they want to have enough information to be able to understand certain things about their health before, and hopefully, most importantly, before they meet with this doctor or this specialist, they can have a little bit of knowledge, and not only that, it allows them to ask better questions. What I find is people don't even know what to ask because this is something, it's not what you do. What you do is what you've been in, is your career for the last 30, 40, or 50 years of building your wealth. Well, I can tell you right now that, to me, I think it's extremely important to find somebody that can help you to get more mileage out of your money, because see, at the end of the day, it's not the wealth you've accumulated, it's how you can keep your wealth. And how do you keep your wealth will depend on how you invest your wealth. And I'm talking primarily whether it's your 401ks, your IRAs, your Roth IRAs, Roth 401ks, wherever your money is. That was the purpose of it, was so that way you can live the lavish lifestyle you hoped when you go into retirement. And today we're going to be talking about my new book. Just came out about a week and a half ago. Now I'm going to be able to start offering this on the radio. It's more current to our strategies versus some of the books that we give away that's been around for several years that still gets the point across. But, I don't know about you, but I like current. I want to know what currently is going on, and so that way I can make the right decision. And I'm saying you the listener, if you're wanting to know, you say be intentional and be armed, just kind of like WebMD, then how do I do that? Well, at first, the first thing is to be diligent, is to be able to get some information about what makes money and how you can make money each and every day. And you do it with passive strategies by investing for income. Most people, the majority of the people we meet with, 99% of the portfolios we see, and it's almost predictable. When we have a phone call with somebody or if they come in, I already know that they're more than likely not making income in their portfolio. Now, they can maintain their positions and run the risk, but they are spending principal. And when you spend principal, I don't know how anybody can think that that is going to be the ideal way to get through retirement, because the last thing you want to do is run out of principal and then you have nothing to make no money. You lost your leverage, because you got to make money on your money each and every year. Kind of like a landlord that makes money on rental property, or a farmer that has a lot of has a lot of acreage. All he wants to do is put that acreage to work and make income and live off the income. Therefore, he can maintain his leverage, that asset that we know over time is going to go up in value. Because see, asset appreciation in land or in real estate, based on this analogy, will go up in value over time. Well, you can do the same thing with stocks, people, and because think about Warren Buffett and Jim Cullen wrote a recent book on this, and Ben Graham were basically the book Intelligent Investor years ago said that that people are actually going the wrong path when it comes to creating real wealth. You create wealth by having something that can actually be in your corner. And what we decided to do for our clients is be able to utilize dividends while they're accumulating wealth with their growth. But if you're spending growth, thinking it's income, then you run the risk of running out of leverage. So at the end of the day, you still got to make income on your money, and then yes, it's true, growth will come over time. And because you have everything still intact, and that makes it such a huge difference versus spending principal, and it makes harder and harder to climb back up that hill to get that money back. Because again, what doesn't change is those withdrawals coming out. You got to have those withdrawals, because the income coming in from Social Security, if you're fortunate enough to have pension or whatever, that's generating income or whatever, is not enough. For most people we work with, they only have Social Security and their 401ks or IRAs, or all the money that they save for retirement. And they want the retirement that they actually had whenever they were working. They don't want that to change. Matter of fact, when they go into retirement, most people we meet with find out that they actually need more, because these are the times to be able to enjoy your money, and retirement is about enjoying your money, the go-go years. So with that being said, I want to get a commission report in your hand called Investing for Income in the Stock Market. That's right, investing for income in the stock market. When you invest for dividends, you're getting dividends and growth. You're killing two birds with one stone. You want to beat inflation, you want to get income, you do that with dividend-paying stocks, not with non-dividend-paying stocks. Those type of instruments you have to sell at the all-time high, hopefully, or sometimes people sell when it's too late. And that commission report can be yours if you call 888-930-1080. Again, that's 888-930-1080. And we'll mail this to you or email it to you, whichever you prefer. Again, you can get this report by calling 888-930-1080. You're tuned in to the Retirement Income Source. I'm Tim Sparks, your host, and we're talking about the retirement income shift, getting the most mileage out of your money. This shift is critical because you need a return every year on your money. Did you hear that? A return every year, because you got to have if you need income, then doesn't it make sense to get a return to be able to fulfill in that void? With that being said, here's what I mean. See, there's two components that make up a return. And I know some of you hear this quite often, but actually for the new listeners, they do not. And sometimes this is maybe the first time they've ever heard it. Total return equals I plus G. Mutual funds, exchange traded funds, which is how people accumulated wealth, are made up of two components. Interest and dividends, that's I, and G is growth or capital appreciation. Interest and dividends are kind of like compared to landlord that's collecting rent. So you're collecting rent, that is income to you. But the value of the home may go up or may go down in value. That's the growth component. That's the unreliable side. Think about it. You need a return every year. So you can do that with stocks and bonds. And sometimes you can do it with mutual funds if you can find them. It's like a needle in a haystack to find them. But unfortunately, there's more cost that incurs with mutual funds. And the biggest reason people don't invest in individual stocks or in individual bonds because they really don't know how to do that. And really, because it takes it takes an education, and most importantly, it takes a lot of experience. You see, the first component, the I, is what we focus on here at Sparks Financial Group. It's the only return that you can expect. So think about it for a moment. It's interest and dividends. And I'm willing to bet most of you that are going down the road right now don't even know how much interest and dividends you're getting in your portfolio. You probably know what your return is, and keep in mind that is not what I'm talking about. It sounds like you're making money just because your paper statement went up in value. The question is, when you go to take income or withdraw from that portfolio, where did it come from? If you're trying to beat inflation, it makes more sense to take it from interest and dividends. It's hard to beat inflation if you're spending your principal. In order to know whether you're going to get the inflation hedge, you got to be able to get the I up to do that. You can do it with individual stocks. You can do it with a combination of individual stocks and bonds, especially for most of you probably listening, you don't want to have the same risk you took to be able to accumulate wealth. But in my example, in 99% of the portfolios, here's what I see. So let's just use a simple portfolio account number of value of $1 million. It could be 500,000, it could be 300,000, it could be 5 million. It doesn't really matter. Keep in mind, you can do it on any number that you have right now when you're going down the road, so that way you have an idea. Here's what you're getting in income in your 401k. You're getting about 1.5% in dividends. That's all you're getting to rely on. So if you leave it in your 401k, the good news is you don't have to hire an advisor in one sense, because if you do hire an advisor, you're going to, when you move mutual funds into more mutual funds, now the financial advisor takes away some of that income of 1.5% that you're averaging in those dividends. And to me, it doesn't make any sense. You don't even need to hire an advisor to be able to do that. You're better off in the 401k. But $10,000 to $15,000 is not enough income for most people that saved $1 million. I would willing to bet that you would like to have $40,000 or $50,000. Well, that comes from the I, and that's exactly what our clients are doing each and every month. So if you would like to learn more how to get the income up, in other words, give yourself a pay increase, because that pay increase can make the difference of whether how long your money will last, then I want to get a book in your hand, hot off the press, The Retirement Income Shift, written by your host, Tim Sparks. This just made Amazon bestseller in practically a week after last week's release. It's a great feat. I'm not here to pat myself on the back, but my goal is to be able to educate the public. And if you have a strategy geared toward interest and dividends, then you always know where your income's going to be coming from. And I got a free copy for the first 5 callers of today's retirement income source by calling 888-930-1080. Again, that's 888-930-1080. And we'll mail this book out to you. Again, if you're one of the first 5 callers, free, no obligation book, 888-930-1080. You're tuned in to the Retirement Income Source. This is Tim Sparks. We'll be right back. Welcome to the Retirement Income Source with Tim Sparks, your host, and this show is sponsored by Sparks Financial Group right here in the heart of the Bluegrass, Lexington, Kentucky. Today we're talking about the retirement income shift. I'm going to be talking a lot about my book and some of the things I have in the book that I think that would be of importance to you, especially if you're going down the road right now or if you're in your home and you want to get more mileage out of your money. And what I find, just like a show I talked about a couple of weeks ago, is a lot of people don't understand what I mean when I say investing for income. I had somebody just here a while back tell me that, my advisor is getting me income. And I told her, I says, do you really know what it was that I was talking about because I had mentioned this in an educational workshop. And I told her, I said, listen, you can call income or withdraw income, it doesn't matter where you have your money invested. You can have your money in a bank account. You can have your money in a CD. You can have your money in a money market. You can have your money in stocks and bonds. You can have it anywhere you want to. But when I say income, I'm not talking about the same thing you are. You're withdrawing your money and calling it income. And what I'm talking about, if you're going to withdraw it, shouldn't it come from real income? And let's just say that I'm right, and I'm not saying denying that she's not getting income. Question is where's the return coming from, the consistent return, which is interest and dividends. So I told her, I says, what if I can show you, and this was about an $800,000 portfolio, what if I can show you that I can get you $2,000 more a month and not touch your principal? Would that at least be worth the conversation to find out, is that something different from what you're thinking when the advisor is telling you that you're getting income? I don't know about you. Listen, I don't have to buy from anybody. And especially when it comes to my money, I want to get it right, because all it takes is one time to get it wrong, and then you're going to wind up being like some people that I have met with that came in here with their head down, regretting decisions they made because they never understood how income could work, but they never made the shift when it comes to retirement. They stayed in the same, stayed with the same advice that advisors still give today, and they've never made any changes. They're still trying to tell people that don't worry, trust my crystal ball. We're going to be able to get your income by taking withdrawals, and don't worry about it. I mean, and I've had people tell me that they got so tired of hearing about that they finally did something about it. But you don't want to be that person. You don't want to, have stick your head in the sand and just assume that everything is going to be peachy when it goes into retirement, because you have to work at it. And you have to, like my dad used to say when he was in Vietnam, he said, and I can imagine, how he felt. He said, when we slept in foxholes, he said, I always slept with one eye open. It's the same way it is whenever it comes to your income. Because if you're taking withdrawals and you don't realize that it's actually coming from your principal, you are running the risk of reducing your principal to the point where it'll be very hard to recover, because inflation forces you, believe it or not, to continue to take more and more out. So in other words, if you can get more mileage by getting interest and dividends, most importantly, give you a pay increase compared to what you're getting, I don't know about you, at least you should take a good look about what I'm talking about. It doesn't hurt to get education. The book that I just wrote maybe take, 3 hours for somebody to read. Matter of fact, I would encourage you to go back and reread it 2 or 3 times, because a lot of times we miss stuff. It's like the Bible. I can read the Bible, which I've read several times. I can go back and reread it, and I continue to learn from the Bible. It's the same way it is in anything when it's come to learning. And when it comes to learning, we want to have a pursuit. We do not want to run out of money. We want to be intentional. As a golfer once said, and I'm trying to think of his name, he said every time he practiced, he said the more practice that I did, the luckier I got. Well, we all know that it's the same way it is in anything we do. And it is including when it comes to your money, understanding money, because you are only going to be the one that cares about your money. You don't want to let go of the steering wheel so quickly and let somebody take charge of the steering wheel unless you totally understand how your income is going to work. So if this makes sense to you, I want to let you know about an excellent commission report called Investing for Income While in the Stock Market. You may be one of those out there that say, I'm afraid I'm going to miss out on growth. Well, you do that with dividend-paying stocks, because keep in mind, if you need income, then it makes more sense to get dividends while you're still trying to get growth. But keep in mind, growth is not guaranteed. Only dividends, even though dividends are not guaranteed, they're much more reliable. And so I got to get this commission report in your hand so that way you can kind of understand the difference. You're not missing out on growth. And I know some people are afraid they're going to miss out. And this commission report can be yours if you call 888-930-1080. Again, that's 888-930-1080. It's a simple and helpful piece, and we'll mail it or email it, whichever you prefer. That number again is 888-930-1080. You're tuned in to the Retirement Income Source. This is Tim Sparks, and we're talking today about my new book just released about a week ago, already made Amazon bestseller very quickly, which I didn't know it was going to happen that quick, but I'm so thankful for that coming out and getting that so soon. But the name of the book is Retirement Income Shift: How to Get the Most Mileage Out of Your Money. This shift is so critical because, believe it or not, when you go into retirement, you need a return every year. And if your returns are coming from the hope side, the growth side of your portfolio, then that's exactly what your strategy will be made of. Always hoping that you're going to get a return. And I don't know about you, but that's not a retirement income plan. That's a retirement plan that's actually going to end not very well unless the markets cooperate for the 30 years while I'm in retirement. You see, getting a return every year comes from the I component. That's the interest and dividend. That's paid to you anyway. People, whenever they call in on a retirement risk report and take advantage of the retirement risk report, which is a great simple one-pager, tells you the difference between your 401k and what you could be getting. In other words, a pay increase from the I side. Keep in mind, if you can get more mileage out of your money, where are you going to get it? You're going to get it not from the principal that you're selling shares. You're going to get it from the I side. And I hate to tell you and break the bad news, but more than likely, your portfolio is relying on growth that gets you through retirement. Although that happens from time to time, it doesn't mean it's going to occur each and every month. I remember reading an analogy one time, and I think it's very fitting. A farmer had plowed around a large rock in one of the fields for many years. And you can probably identify this if you were a farmer. You know, he damaged several of his tractors, and as you know, today it can be very expensive to fix your tractors or even the equipment that you utilize on your tractor. Because he had this big rock, or perceived had this big rock, that was, he kept hitting it every time, and it caused his damage to his equipment. Now, of course, he was probably just being hard-headed. He finally decided to do something about it, so he paid for somebody to come out with some dynamite, but before he did that, before he made that phone call to get an expert out there to dynamite and blow that rock into smithereens, he decided to give one other shot and do something different that he's never done before. So he took his pry bar out and he started to try to get up underneath the rock. As you can probably imagine, pry bar is pretty heavy duty piece of steel, and it's not necessarily pointed. It kind of looks like a chisel. And it turns out the rock, even though it was a pretty good sized rock, it was actually smaller. It was much wider than it was thick. It wasn't really as thick as he thought it was. So in other words, it got him so much courage, he decided to go get him a sledgehammer to actually break up this rock so he can get this rock off from his property and go put it somewhere else or bury it or whatever. And so he finally removed this rock, and he didn't realize how much trouble it caused, and plus how expensive it was for his equipment. But you see, that reminds me of giving financial advice to people. You see, I have been dealing with the obstacle of helping people spend their principal, trusting the crystal ball, for like 14 to 15 years before I started realizing that that is not going to work. Spending principal will not work in retirement. But that obstacle, the income, the interest and dividend, wasn't that very far away. It was just like this rock that he was actually finally found out it wasn't as bad as he thought. It's the same way it is when you invest for income. You're not giving up growth when you invest for income. If anything, you're going to be able to promote growth because now you have your principal intact and all you're doing is actually spending the interest and dividends. And I just want to share that with you. I think just to help you to understand, I have been on that side. It's not like I'm turning a blind eye to potential growth by offering a growth play for people to get in retirement. It's really nice when growth rears its ugly head in a positive way. I mean, we've actually seen it. Markets are up, 40 or 50% for the most part since 2022 when the markets were down 25 to 30%. But I hate to tell you, you take a negative 25 or 30% loss in 2022 and then add that to 40 to 50%, you're really not up that much. And if you were taking income over that 2.5-year period, you were still spending principal, and therefore it looks like you're doing well, but you're really not. And that's the whole point. Avoid running into that obstacle. To avoid that, you want to invest for interest and dividends. And that brings me up to my new book that just came out, Retirement Income Shift, written by your host, Tim Sparks, just now made Amazon bestseller less than a week, just a little over a week after the release. And we talk a lot about in the book about income first methods, the components that you need to get you more mileage out of your money. And I got a free copy for the first 5 callers of today's radio show. You can call 888-930-1080. Again, that's 888-930-1080. And we'll mail this out to you. Again, if you're one of the first 5 callers, free, no obligation book, 888-930-1080. You're listening to the Retirement Income Source of Tim Sparks. We'll be right back. Welcome to the Retirement Income Source of Tim Sparks. And our show is sponsored by Sparks Financial Group right here in the heart of the Bluegrass, Lexington, Kentucky. Today we're talking about the Retirement Income Shift, my new book that just now came out, Amazon bestseller, and just after practically a week of the release. And this book talks a lot about income the old-fashioned way. This is nothing new. Sometimes I wonder, people are thinking this is something new. No, it's new to you because you've never heard of it, but it doesn't mean it's not new to high net worth individuals that actually do this every day. Anybody ever remember Warren Buffett? Warren Buffett actually created his wealth through dividend-paying stocks. And even his best friend, Charlie Munger, even right before he passed, he knew he could never detach Warren from the idea of getting away from dividend-paying stock because he's seen the value of it. And by the way, with all the wealth that he's accumulated, he must have done something right. You see, the missing component to get more mileage out of your money is just simple. You got to invest for income the old-fashioned way. What you may not know may hurt you, or simply put, you run the risk of running out of money. You see, you want to earn money on your money every year. So that kind of reminds me, the same way as if I own a rental property, the rental property we know today, if I paid, if I wrote a check for it, it doesn't mean it's going to be worth more the next day. I've got to have time to do that. So if I want to make money on my money, I got to get income and so therefore I'm going to actually rent out the property and collect the income and hold on to the asset, and maybe in the future may sell that asset. Well, you see, when you have individual stocks, you don't want to sell your assets to get income. Doesn't make sense just to get income just exactly like you could have if you were collecting rent. You see, most of us want to get it right, whether you're a pre-retiree and you're wanting to get educated and informed, which kudos for you if you are trying to do that, or the retiree who's already in retirement. The goal is to get some information to arm you so that way you know what path you want to take. You got to be very careful. The majority of the plans that I see today, and because I run across people that's already been in retirement, it's still the same run-of-the-mill advice. Just selling you mutual funds means you're not taking income from the I component. Really, actually, it's just the opposite. You're taking it from principal. You have to sell shares to get income from that part of your money. Although mutual funds may have got you here, doesn't mean they're going to get you there. So you want to make a shift. You want to give I want to give retirees an advantage to defy status quo by not succumbing to the all-common advice that I see today with most financial advisors. Financial advisors mean well, but just like the analogy I gave earlier about the farmer running across a rock, didn't realize the problem was that significant. He finally took a pry bar and pulled that and actually got rid of that rock, but therefore he had a lot of damage. Good news is he was still he didn't have to worry about paying for an expert to come out and dynamite that dynamite that rock to smithereens so that way he can get rid of the problem which he had been dealing with for years. You see, that kind of reminds me of the advice that I've been given for many years. When we give advice to people, as a financial advisor, it's up to me to be able to look in the weeds. That's what you're hoping, to be able to find where is the money coming from. So if I'm selling shares, I'm just being clever in some way and actually ignorant in a lot of ways because I really don't know where the money's coming from. So I'm just like anybody else, just take withdrawals and actually I should be saying I hope that everything works out. And that may be the conversation it should be with the advisor to the person, or you're going to actually find out the hard way that you're actually taking withdrawals, selling shares, and calling it income. I do think that all financial advisors mean well. That's got nothing to do with that. So it's not me being critical of financial advice that's given today, even for somebody that's in retirement. You see, people don't want to run out of money before they run out of their breath. But you're doing the very thing that's going to cause you to run out of money if you don't make that shift. You see, I'm here to tell you it's not all your fault, or definitely, most importantly, it's not even the financial advisor's fault. It's how they're trained. You see, if the financial industry is not as concerned about investing for income, which requires a high salaried individual called an analyst, then it's a lot easier just to get mutual funds or pre-packaged and a lot easier to sell, just kind of like you buy a car. It's no different. But the thing is, though, the herd mentality advice that financial advisors are actually given the same advice. So most people are following the herd mentality. And I'm sure that you probably go online, you do I'm willing to bet most of the people actually before they retire, they spend a lot of time doing research so that way they can know where to go to get their advice. And you're trying to arm yourself, but believe it or not, just like that farmer, it could be that the rock is not that big of an obstacle, and believe it or not, investing for the eye is going to make a huge difference, and actually it's much simpler than you think. And the goal is, and in the right way, you want to preserve your wealth, just like the landlord. He owns the rental property, so it's going to go up in value. So he's preserving the home, so he rents it out and collects income. That's how he preserves his wealth. You're not going to preserve your wealth by selling shares. That's actually going to work against you in the long run. So if this makes sense to you, maybe I need to get a commission report in your hand. I think it would be very valuable, called the 10 warning signs of working with the wrong financial advisor. You keep in mind, it's not the advisor or how good they look or how nice their office is. At the end of the day, the results is going to be is going to determine whether you had a lavish retirement or not. If you can get a pay increase on your income and you didn't know you can get a pay increase, I can tell you right now, you're going to get more mileage and you're going to have a much more lavish retirement than otherwise if you was to spend your principal. Because there is a huge significant difference when it comes to getting the most mileage out of your money. So this commission report can be yours if you call 888-930-1080. Again, that's 888-930-1080. And we'll mail it or email it, whichever you prefer. Again, that number is 888-930-1080. You're listening to the Retirement Income Source. This is Tim Sparks, and today we're talking about the retirement income shift, getting the most mileage out of your money. This shift is so critical because you need a return every year. If you're taking withdrawals from your portfolio, it makes more sense to come from something more reliable. You can get that for interest and dividends. But here's the problem. Most people who are listening to the show are not getting the interest and dividends that they otherwise could. So you're leaving money on the table. I don't know about you. If I'm investing my money, the last thing I want to do is to leave money on the table. Because we all want to do our due diligence. And why would anybody want to run the risk of running out of money when all they had to do is make a tweak? Doesn't mean you have to get out of the market. It just means you have to shift from the instruments that are in the market that actually pay you more income. So with that being said, I always like to share some stories of successes and also with people that we come across, just to make a point that this particular person actually was referred to us from somebody from our radio who's actually been investing for income now for a while. So we give them the book and we want them to be able to read it and so forth, because actually I prefer them to do that before we have a conversation. And so once they both actually read the book, and when they got back from their vacation, they immediately want to have a conversation. And so I don't know about you, but this is kind of how the conversation started. They're both in retirement. They've saved just under $1 million. And just like anybody else, they want income. They want to be able to enjoy their early years. They don't know how long those early years are going to last as far as their go-go years, but they want to give it their best shot. And the thing is, when I talked to him, when she had actually stepped away from the meeting for a minute, said, I wanted to make sure that our money lasts longer than we, because my concern is my wife may live to early 100s because of longevity. He said, I don't know exactly how long I'll live, but I want to make sure of that. And kudos for him thinking about his spouse in this situation. But, when I was talking to him, they told me and I asked them, I said, do you work with a financial advisor? And of course they have been. And they said, yeah, the guy's a really great guy. He's young. He's like in his early 30s, and he has helped them, get their portfolio where it is now and so forth. But they said that I feel like I'm getting a little resistance from him, and when we had recent conversation about transition and retirement. And by the way, these people don't like to lose any money at all. And by the way, they were in the market, so it's an oxymoron of thinking that you're not going to lose money if you're in the market. You are going to lose money no matter where you have your money. And if you have your money in the market and you're one of those that don't like losing a lot of money, matter of fact, don't want to lose hardly any money because of the memories came up of the dot-com bubble in the early 2000s and the financial crisis, they don't want to go through that in retirement. And so they wanted to make a change because it looks like they were getting resistance. And some of the reasons why they were getting resistance, because the financial advisors are fairly young. So think about it for a moment. If you're young, you want to take more risk. So you got to keep in mind, if the philosophy of the young person that you're dealing with is take more risk, you don't know if you're taking that kind of risk. And so it's okay with them because they know that over time that the markets are going to go up, and I'm willing to bet most of you took risks to get to where you're at. But when you go into retirement, it's now to figure out how you're going to keep your money, not necessarily how much more money you're going to make on your money. You've won the game, quit trying to win it again. I mean, it's like a roller coaster ride. It's like, oh man, I remember when I used to ride the Beast a lot, and I wanted to be in the front seat, which was always the seat that most desired, and it was the one that had the longest waiting line. And I like, the joy of the Beast, but I don't know if I'd ever get on the Beast now, because as I get older, I'm not sure if I can handle it like I did whenever I was young. But I love it. But it's the same way it is whenever we're taking risk with our money, and if the philosophy of that advisor is to put you in stocks, and you don't even know if you're in income, you don't have a plan B. And not only that, it doesn't matter how much your portfolio grown, you don't know tomorrow, and neither is a financial advisor. So here's what the conversation will happen. If the markets do go down, they didn't see it. It's not their fault. The markets go down, got nothing to do with the advice or the knowledge of the markets going up or down, like a weatherman, same way. They don't know neither the future of the weather, and so neither should you, and neither should you blame them. And so at the end of the day, it's kind of somewhat your fault as much as it is theirs. You can't just assume that they are, it's not that they're doing the wrong thing. They're just doing what they feel like is in your best interest. And if in their best interest is not to lose money, you don't want to be in the market. And so, or you want to be able to reduce the amount. So I actually talked about investing for dividends while the markets are the markets. That way at least you can get income from it. And of course, since this was something new to them, that was still kind of uncomfortable. So I started talking about bonds and bond-like instruments. And so we'll talk about more on that in just a minute. So I want to get an excellent book in your hand, The Retirement Income Shift. And it's written by your host, Tim Sparks. And it's we just now made Amazon bestseller when just slightly after a week of the release, and it's a proud accomplishment of ours. It took me about 19 months to write this book. Could have been done a little sooner, but at the end of the day, I'm glad we finally got it out. But I want to get this book in your hand because it talks about winning in any environment. And I got a free copy for the first 5 callers of today's retirement income source by calling 888-930-1080. Again, that's 888-930-1080. We'll mail this out to you if you're one of the first 5 callers. Free, no obligation book, 888-930-1080. When we get back, I'm going to complete the situation of this couple that thought growth, they really didn't have nowhere to go, but they thought growth was going to be the way to get them through retirement, just like it did to get them to retirement. And I want to go more into that in depth and what we did to help them to be able to get crossover and make that shift. And so more on that here in a minute. You're listening to the Retirement Income Source with Tim Sparks. We'll be right back. Welcome to the Retirement Income Source with Tim Sparks, your host. Our show is sponsored by Sparks Financial Group right here in the heart of the Bluegrass, Lexington, Kentucky. And today we're talking about the retirement income shift. My recent new book that just now came out talks about everything we talk about on the show, but more in depth, and a lot of great information examples in there that can help people along the way of the path of what makes most sense for their retirement. You see, the missing component is really simple. It's the I, investing for interest and dividends. Income, the old-fashioned way. This is the best way to get the most mileage out of your money, and most importantly will help you of not running out of money, which is still the number one concern with retirees today. So earlier I was sharing with you about a couple that had been working with a financial advisor the last 5 or 6 years, had done very well. It's got nothing to do with the financial advisor, not trashing financial advisor. I am one too. I wouldn't want nobody to trash me. But at the end of the day, it's really just nothing but the philosophy. And I'm just sharing with you our philosophy, but I'm also comparing it to other philosophies. And the philosophy that we ran across was kind of similar to what I see half the time. Keep in mind, I've had over 2,000 meetings with prospective clients and actual clients too over the last 20 years. I've heard it all. And what I have seen is the very same common theme. And this couple had actually ran across or been working with this financial advisor who they really respected, good Christian man, which is extremely important for them because they were looking for somebody more, in line with their values as well. And but at the end of the day, they felt like that he was more resistant to make any changes. Matter of fact, he's already told them, even though they went into retirement, that don't worry, it looks like everything's going to be good. I really don't want to make any changes. Well, if you've got roughly 70% of your money in stocks, and by the way, keep in mind, this person doesn't want to lose money now. Actually, when I asked them, and I was trying to role play with them about how much money they were willing to lose, even if they hired me as a potential advisor, and they told me I really don't want to lose any money. And so I kind of broke that up a little bit of their thinking. And the biggest reason why is I told them, I said, you can actually do that in a CD, but what are you running the risk if you don't want to lose any kind of money at all? Well, you're running now the risk of not keeping up with inflation. I said, does it make more sense, because you're not used to what we're talking about, the income shift, investing for income. You've heard it. What you're doing is you're basing everything on because the markets have went up and down, and you've taken as much as a 50 or 60% loss back in the early 2000s, and you don't want to go through that in retirement. So that's what you're thinking. Well, you see, if you invest for income, I'm talking about income, interest and dividends, and you went through this era, the losses are not as significant if you do it and do it right. It can be, because there's no guarantees of any instruments out there that you invest in the market. But if you're investing for income, you can ride it out even if that was to occur. Now, I'm not neglecting your risk tolerance, but at the end of the day, we want to be able to get the portfolio designed around your risk tolerance. But most importantly, we don't want to give up income and also be able to beat inflation. We do that with individual stocks. So I want to get a commission report in your hand if it helps you to understand, are you working with the right financial advisor? It's 10 warning signs you're working actually with the wrong financial advisor. And this commission report can be yours if you call 888-930-1080. Again, that's 888-930-1080. We'll mail it to you or email it, whichever you prefer. 888-930-1080. You're tuned in to the Retirement Income Source. I'm Tim Sparks, and we're talking about the retirement income shift. What do I mean? Well, when we accumulate wealth, we have been in one phase probably for 30 to 40 years. But if you want to distribute wealth, in other words, now you're taking withdrawals and subtracting from your portfolio, you're not adding. Keep in mind, now you're subtracting. Now, doesn't it make more sense to actually make a shift to where when you take a withdrawal, it equals the interest and dividends you're making. Therefore, you can be as successful in retirement as you were trying to get to retirement. I've never met anybody that likes to lose money. I've even had people tell me that they thought I was conservative. I said, okay, you got $1.2 million here. If you lose $400,000 in a portfolio, actually, let's just say you lose $500,000 or $600,000 in portfolio. Tell me, how did I do as your financial advisor? They said, well, not too good. I said, okay, there we go. See, you don't want to take that kind of risk now, right? Because the markets, just because they haven't done it in a while doesn't mean that they can't do it again, because nobody knows the future. The markets have tanked over the last 120 years, and we've had, I don't know, I read an article somewhere, I forgot how many recessions we've had, over 22. And so if it seems like that the markets have a tendency to repeat themselves more often than not. So if you're going to plan, you plan just in case that does happen. Because see, you can win by investing in stocks, but you do that by investing in stocks that pay dividends, not stocks that don't pay dividends. You may get growth, but now you got to spend it in order to create income. So going back to this couple, I want to let you know that they wanted to be more conservative, and I shared with them, I said, you can actually get your portfolio, you can design it to where you're getting interest and dividends, but you can get the risk tolerance that you're willing to, that's acceptable to you. And to do that, you got to be able to invest for income. And so they finally caved in and felt like that I convinced them enough to look at dividend-paying stocks for some of their portfolio. Why? Because you kill two birds with one stone whenever it comes to dividend-paying stocks. You see, right now, the valuation disparity, and we're talking about right now between value and growth, is near an all-time high. Yeah, you've heard that. So further suggestion, the pendulum may eventually start swinging the different way. You see, growth, the only reason why it's done well is because of the AI on demand. But just because it's on demand doesn't mean it's always going to continue to go up in value. A lot of times people don't know when to get out. And I can tell you right now, the pendulum's going to change. You read anywhere at all, value stocks is the way to go in the long run. It always has. Value stocks have always outperformed growth the majority of the time. Now, if you think about that for a moment, that means if it's done that, and everybody says, okay, I want growth, then if I can get growth and dividends at the same time, doesn't that make more sense to have that kind of income plan? I don't know about you, but that's the kind of income plan I want, especially when I want to combat inflation over time. So on their roughly $1 million, we got their income to $40,000 to $45,000 versus the income they were going to get with their current advisor. They were only going to get about $5,000 to $10,000 a year. By the way, these people want to enjoy retirement. That was not enough. Now, before they read the book or knew anything about the friend to sharing with them the idea of investing for income, they were going to go down the same path as most people take, and that is spend principal, that's because they're withdrawing their money, calling it income, and hoping, and really not even hoping, they don't even know that they're doing it, and they're running the risk of running out of money before they run out of breath. So if you want to avoid that, I encourage you to call our show, reach out, 888-930-1080, and get the Retirement Income Shift. It's written by your host, Tim Sparks, Amazon bestseller just here recently. Also, we're going to be doing some two different book signings here in Lexington and libraries here in December. I'll tell you more about that a little later. But again, for now, for this show, I like to get this book in your hand, because when you go through this book, you're going to learn a lot about investing for income, because it's always about learning. Learning is, to me, it doesn't mean anything if you learn and you don't apply the knowledge, right? I know a lot of people has a college education and never uses their college education in their careers, but that's not what I'm talking about. Applied knowledge is where where the rubber meets the road, and so I encourage you to reach out and do what you think is your best philosophy. And this is a great book, and talks about investing for income and how to get the most mileage out of your money. Again, call 888-930-1080. We'll mail this out to you if you're one of the first 5 callers. Free, no obligation book, 888-930-1080. You've been tuned in to the Retirement Income Source with Tim Sparks, and I hope you've enjoyed the show today. The purpose of today's show is to let you know about my recent book. It's on Amazon, Barnes and Noble, and from my understanding, there's about several bookstores that's got our book out already. And it's an excellent read, a very quick read, and the goal is to understand the philosophy of investing for income. We hope you enjoy the show, and we look forward to next week for some great information. And so, with that being said, y'all be safe out there. And we're going into the election week, and I'm sure a lot of people are worried. And we will be back again next week for some great information. Thank you for listening.